Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, festivities around the corner and Indian equities are set to extend the exuberance in the rather holiday-shortened eventful week. GIFT Nifty signals a positive start coming in for Indian equities. Let's talk about the global cues. Wall Street tumbled, Treasury yields gained as focus turned to Fed. In terms of Asian shares, they've stumbled to an extent as investors brace for central bank packed week. Let's talk about FII data. They've bought shares to an extent of 164 crore and talk about DIIs. They've purchased equities to an extent of 1,938 crore. Now, let's get to know more about the trade setup, strategy of the day, and F&O updates with Prashant, the co-founder of Catalyst Wealth. Morning there, Prashant.
Good morning, Nickey, and a very good morning to all the viewers.
All right, festivities clearly around the corner, but it's a holiday-shortened week. Global also, it's a packed week. Howie, what's your strategy for the markets, for Nifty, Bank Nifty, given that we're sitting at a record high level?
So, Nickey, last Monday when we discussed, I had mentioned a level of 20,250 on Nifty futures as being a crucial resistance. I think we almost captured that on Friday. So, ideally, one should be trailing the longs very closely. And if you look at the pre-open now, we are already showing a bit of weakness. If you look at it, after a long time, we have a 35, 40 point odd gap down, whereas we were used to opening gap up. So this is a crucial and a volatile week. And my suggestion would be to maintain a strict stop loss if you have longs on Nifty. And in futures, it should be around 20,180. 20,180 would be a make or break level. If it triggers, my suggestion would be to book out longs on Nifty futures. At the same time, if you look at Bank Nifty, we almost captured the 46,000 plus, that is 46,300 levels on futures last week, which was a very good rally led by HDFC Bank. I think one should be holding Bank Nifty with a stop loss at around 45,980, which is just below 46,000. And if that triggers, you should be out of longs. Overall, I'm looking at I'm keeping a cautious approach for this week because we are heading into a major time cycle. There are a lot of volatility in this week, typically the third week of September. So my suggestion would be to stay light and especially in the mid and small caps and wait for a dip. If we get this dip, it can be a very good opportunity to go long for the next month.
All right, that's the word coming in. We're going to check if you're going to be recording in a record high level yet again for the open. Clearly, some amount of exuberant Asian shares at this point of time aren't really indicating of a positive start, but GIFT Nifty is. So there is some amount of caution which has crept into the market. There is a profit booking which has clearly crept in early deals ahead of the holiday shortened week. 0.3% of losses coming in for Nifty 50. Well, look at Bank Nifty and how is that stacking up for you? Bank Nifty is also witnessing some amount of selling pressure, losses to an extent of 0.25% even for Bank Nifty. Let's talk about midcap index along with that of small cap just to see if the outperformance is perhaps even losses coming in for midcap index. 0.1% of loss coming in for midcap, but look at that. Small cap right now is bucking the trend and is witnessing some amount of gains to an extent of 0.25%. Let's also look at what we have in terms of IT. Well, losses to an extent of 0.75% out there for the IT index. Clearly, the pressure is mounting for IT index. Let's look at the other defensive pack out there. Pharma, a flat start with positive bias, remains to be seen. Profit booking creeps in. FMCG, well, losses again, but a slender positive start coming in for FMCG. Let's talk about consumption story remains intact, something in the like of realty, perhaps banking, PSU banks essentially is what I'd want to highlight because that was the one which is at 13-year high. A lot of optimism around that. Auto index down and out, perhaps a little bit of losses creeping into early deals. A realty index is also open on a subdued note. We're looking at losses to an extent of 0.3%. Look at PSU banks. They're shining in green right now. 0.3% of gains coming in for PSU banks overall. Look at what we have in terms of the top gainers and the top losers, and then go across to our special guest that we have for the show, Sushil Kedia, who is the founder of Kedianomics. He's going to be joining us to take us through the entire wave, whether we could ride through it or no. Tata Steel clearly is the stock of the day after the news report has come in with the support that was anticipated from the UK government. Perhaps a bit of profit booking that could come into the account and remains to be seen. Asher Motors, M&M, these are some of the other top gainers that we have on the list, along with Cipla, Tata Motors and NTPC. These are some of the other top gainers that we have in terms of Titan Power Grid and Sun Pharma also showing up in green on the screen right now. Let's talk about the top losers that we have in early deals. Hindalco perhaps is witnessing some amount of profit booking in early deals. We're looking at Infosys and Bharti Airtel. Remember, the telecom companies that were doing well on Friday perhaps are witnessing some amount of profit booking in early deals. Tech Mahindra, HCL Tech, and Hero MotoCorp. These are some of the top losers that we have on the list right now. But let's go across to now our guest Sushil Kedia, the founder of Kedianomics, joining us to take us through whether we could ride the wave or exercise caution. Clearly, some amount of profit booking coming in for the markets. Remains to be seen if the direction is yet to be reversed or it's just a pause or a breather that the market is taking right now. Morning there, Sushil.
Morning, Nickey. Many happy returns of the day to you.
Thank you.
Let this be very special for you.
I hope it's special for the viewers out there because a bit of profit booking has crept into the markets. Perhaps a little bit of sell-off pressure. What do you make out of this? Do you think this is just a start off to something which is big in offing, or you think it's just a temporary breather in the otherwise structural bull markets that we're witnessing?
See, a decent enough correction is overdue. And to say that this is it is a little early. It will come whether now it started today or it will happen in a few days. But there are going to be sectors and opportunities that will still go up. We are into a structurally bullish motion, but within which the large caps are overdone, particularly the banks. And there's too much of brouhaha now. Too many intelligent voices around claiming that PSU banks have suddenly found gold. From the bottoms of 2020 to now, most of the PSU banks are 6-baggers or 5-baggers. We bet very heavily on them through 2022 and early 2023. We've advised our customers to take seriously profits on the PSU banks where, now everybody is getting emotional. When people are emotional, somebody has to be rational. So if we were labeled as emotional, that we are patriotic in buying those banks, while in markets, nobody's a patriot, everybody works for profits. So we took the drudgery, we took the brunt of taking an apparently larger risk. And now those who are finding the comfort to buy those stocks, they will have to pay us. So we are betting on a 30% odd correction in the smaller PSU banks, where we are going to grab them again for a doubler again. So that's one big pocket where a very sharp move can come in. Now, there are two sectors really, chemicals and oil and gas. I'm not going to play bearish trades on. Say UPL goes down to 600 odd. It's just a 5% correction. But I think after that, if it rises to 1,000 rupees, I won't be surprised. If, say, a BPCL, in the noise of today, is maybe going to retest its prior bottom of 348, 349, I'm going to bet for a move on 390 on BPCL. We are looking at some very big moves on crude. Let this be remembered as either if it comes massively wrong or massively right, as Nickey Mirchandani birthday call, we are looking at a new all-time high on crude. New all-time high on crude. In MCX terms, I'm gunning for seeing a price of 11,500. But before that, a 10% correction is just about coming around now. So what will lead to such a move on crude? When everybody knows electric vehicles are coming, the demand for crude is going to subside, alternate energy, this world is going gung-ho on. The only thing that can come is two things. A scarcity led by a geopolitical event, and that's a risk for equity markets as well. Usually, crude going up is good for the markets because crude is the most sensitive risk asset, and the risk appetite for the world is reflected first in crude. But when scarcity strikes, a geopolitical event strikes, then it works the other way around. So we'll have to play tremendously, and if such an event happens, I think the energy crisis in Europe will create a massive opportunity for Indian chemical stocks. That's a thesis many are betting on. Charts are reflecting that. We'll keep buying the chemical stocks. We'll selectively keep loading up on refineries and oil marketing companies. But very dangerous signatures on the charts of large banks, PSU banks. Very dangerous signatures on the charts of autos. So we'll look for short trades in them. IT large cap stocks have overstretched themselves. And like a catapult, they may make a boomerang move to hit a new low anytime when markets reverse. That's the broad thesis we are working with.
All right. I second that view when you say that the crude is completely linked to equity markets, and a surge with otherwise, probably has some fears around the inflation, around the current account deficit. Perhaps if you look at the historical performance, it's always the surge which is played out in the benefit, barring the cases of geopolitical concerns, of course. But let's look at telecom stocks there, especially Vodafone Idea and Bharti Airtel. A bit of chatter doing round for Vodafone Idea, where there were a lot of reports stating that's going to be Amazon, perhaps the Elon Musk-led Starlink, which could be one of the potential buyers for Vodafone Idea. This is not the first time Vodafone Idea is looking at something like that, right? I mean, in the past also we've seen that, but nothing has come out. So I think perhaps one of the reasons also why Vodafone Idea has not entered into the F&O ban, because there's not of conviction much around the development. How do you read into it? What are the charts looking at, like, for Vodafone Idea and Bharti Airtel?
See, misfortune and good fortune can strike anyone anytime, no doubt on that. But Vodafone Idea has had a history that after it doubles from the lows, all of these glorious good future stories suddenly spring up. Distribution happens, volume spike has happened. I wish I could show the charts today to make this show sharper. We last time did that, but we forgot to connect my laptop to your broadcasting system. But anyways, we got in at around 6 on this and doubled up the position around 7.5. We got out around 10.5, 11. So it's not a lost cause, but I think the charts are overstretched. And if these stories come true, there will still be opportunities to buy on any pullback closer to 9. We are definitely not buying in here. Bharti Airtel, with the momentum of the market, has overstretched itself into this high. When the next correction sets in into the markets, I think Bharti will be the best aggressive short sell. It does not have a long-term bull market structure. With the tide in the ocean, boats and ships with even a pierced bottom are kind of tending to rise with the thrust of waves inside the shores. So Bharti Airtel, I don't see the story sustainable or the chart sustainable. So I'm going to refrain from these stocks. And even on the downside, these are not easy stocks to trade. So while the money is on the table, we would say if we must give an opinion, then take the money while it is available.
Sure. How about something like within a very broad-based basket, that is the mid-cap space? How does that appear to you after the rally? Do you think there could be still a chance of next multi-bagger from this category, if at all, in this near term? Something that probably could match up to the level of IRFC, Bank of India, Tata Teleservices. Essentially, these are the stocks which have done well in terms of month-to-date basis. How are you playing that?
So see, there are a number of stocks in the chemicals space, almost all of them, the amine stocks, alkyl amines, Gujarat Alkali, those I think are 2-3 baggers if one holds them peacefully. IOCL chemicals, which is very volatile right now. So, you'll have to buy it with a bucket of salt, small positions with an appetite to handle 5, 6, 7, 8% kind of any intraday volatility. That stock should treble to our mind. A stock like Copran, we are eager to jump in with a big buy the moment it starts trading above 230 for an immediate jump to maybe 430. And over a long period of time, I won't be surprised if it goes into 4 digits, but that requires a patient investing. Shilpa Medcare, on which we've been bullish for a while. Now, if it triggers above 385, a immediate spurt grab buy will come in, which we are going to hold for a ride all the way to 800. So there are a number of stocks here and there. Say Bombay Dyeing that really did well. We bought at 50, we bought at 80, we bought at 110, got out at 155. And now again, after this confirmation of news, whatever 2-day harakiri happened with a 25 rupees downside from a gap up opening, I think the stock is preparing again. And the moment it starts trading above 155, we'll shoot a buy call for a move to 195. And maybe if it pierces 250, otherwise goes to 195, comes back to the present levels and goes to 250. So the easy gliding money, that one-way ride like BSE did, is still there in a few selective chemical stocks. The other stocks on cash that we currently see having a large upside still will be volatile time to time in between, and maybe that volatility will creep in if a broader market large cap correction sets in.
Sure. Sushil, a follow-up to your sharp correction that we are witnessing, that you're expecting perhaps for the smaller PSU banks, that's perhaps a contra call as compared to what most of the analyst community perhaps is expecting. And the performance that we've seen thus far within the banking space, which has only started showing well in terms of the financials. Sure, some compressions in coming in Q1. But within the PSU banks, would you want to segregate the men from the boys?
You know what? Boys who've been underestimated for too long, their time has come. The ugly pariahs of public sector banking, the smaller ones, the neglected ones, they had once upon a time continued to rise to become 10 baggers over a 10-year period when this world was witness to rising interest rate regime. And thereafter, from 2013 to 2022, a continued 9-year declining interest rate regime made life tough for them. In that prior era, people were going out and lagawing jogad to get a loan. So these banks are not good at marketing or developing business. These banks are good at doing dadagiri. And now their era has come back. There will be a phase of spiraling interest rates first. We were ridiculed very heavily when in 2021 we went out first saying this world is going to witness a complete reversal of interest rate regime and these stocks are going to be 10 baggers. Almost all of them have been 5 or 6 baggers now. We're only looking for a 30% correction. The smaller ones are going to rise more. The smaller the PSU bank, the uglier looking the PSU bank, it's going to still be a 4-bagger from here. So don't get stuck with the glamour of SBI or a Canara Bank. Those are already fairly discovered. The value has been squeezed out. The value creation will come. See, there are two types of businessmen. Those who will take advantage of the circumstances and those who will never be able to take advantage of circumstances, but circumstances will heap glory upon them. So these pariahs of the banking system are right now running that phase of luck when glory is going to be heaped upon them. The uglier the PSU bank, the more money it will make. So don't underestimate the boys.
It's more ugly.
Men are done. It's the turn of boys.
All right, Sushil, which one looks ugly but yet needs to be, perhaps will turn out pretty according to the charts? What are you looking at within the PSU banks, if at all?
See, I'll tell you what, stock market hates extremely intelligent people like you. We have to be humble enough with the market. We have to, channelize our intellect to only see what the market is willing to offer. I can't demand so many things from the market. A broad call, almost all PSU banks except Canara Bank and SBI because of their size, maybe they'll go 15% correction. The rest of them are all broadly looking for a 30% correction down. I'm unequivocal. I don't mince my words. And thereafter, we are looking at a 2-bagger, 3-bagger move again in the smaller PSU bank. That's as clearly as one can speak.
I'm just going to be addressing in stocks and news just a bit and then go back to Sushil and Prashant, perhaps if he's still around with us. Jupiter Lifeline is going to be listing on exchanges on September 18. The IPO is expected to list at a premium of 30% according to experts and the analyst community. The issue price is of $735 per share. Now, the healthcare provider 869 crore issue was subscribed 63 times during September 6 to 8 and majorly was backed by qualified institutional buyers. That's the word coming in. Tata Steel is another one that we need to discuss, perhaps. A bit of news that was anticipated and was doing rounds. There were a couple of reports. PTI suggested that this is going to be happening in terms of the financial aid, which was expected to come in from the UK government. The news is finally out, where the company, along with the UK government, will be investing in the Port Talbot with a capital cost of £1.25 billion. That the company is also going to be getting in some grant coming in from the US government, UK government, and the project is essentially expected to reduce the emissions by 50 million tons over next 10 years. The project is expected to involve Tata Steel's balance sheet being restructured, may see potential elimination of current cash losses in UK operation. That's the word coming in for Tata Steel, a bit of development which is already seen in. The stock has run up in the last week, perhaps a bit of slow momentum coming in for Tata Steel, but that's the theme, or the metal sector is rather the theme that we need to discuss more in detail. Texmaco Rail, where the board has approved in fundraising to an extent of 1,000 crore via a QIP. It's going to be raising in another 50 crore from the promoter category via the issue of preferential shares. BEL, keep that up on your radar this morning too. It's received an order worth around 3,000 crore. Essentially, if you look at the breakup, it's 2,118 coming in from Cochin Shipyard, and the other one, that's 886 coming in as an additional workflow. Let's also talk about ONGC and Oil India, perhaps the theme that we need to keep an eye out with the crude. But there's a development there where the government has increased the windfall tax on the domestic production of crude oil to 10,000 per ton from rupees 6,700 per ton. A bit of profit booking right now is being witnessed in ONGC. The increase will come into effect let's just say has already come into effect from September 16. The government is cutting the special additional excise duty on the aviation turbine fuel too. We're going to be talking about that in just a bit. But Vodafone Idea, we discussed that in detail, where the report, multiple reports are suggesting that the US telecom giant investment and control something in the likes of Verizon, Amazon as potential buyers. Also you have something in the terms of Elon Musk linked Starlink, which could be in the consideration. Do bear in mind the fact that this stock has almost rallied 20% in the last 2 weeks, and 0.5% of losses coming in for that one. RBA, multiple funds have actually bought, and promoter has kind of exited. There was a 25% equity change of hands that we saw through an open market transaction. And you have names such as Tara Mutual Fund, which is bought into this fund. You have TD Emerging Markets and Quant Mutual Fund, ICICI Prudential Life Insurance Company, Goldman Sachs. These are some of the buyers that we have for RBA. Then Lakshmi Bank. Let's address that one, where the independent director has quit, citing multiple issues. The bank has been in the news for the top level resignation and operational issues in the last couple of years. Let's go back to Sushil perhaps and check with him his view now on metal counter, essentially Tata Steel, where a lot of already been done in terms of the last week, stock performance, where there were reports doing around of some financial aid perhaps coming in. It's probably too late and too little to the little fundamental understanding I have on this counter. But how are you reading into the charts? Should one book profits or probably wait for dips to come in, or ride the story, because metal right now seems to be shining with the China stimulus theme?
I totally disagree with all of this. This blowing up of the stock charts of these metal producers is truly only the market liquidity. We don't see any structures in the charts of these stocks that give us the courage to believe there will be a sustainable uptrend of an investment horizon. We have kept all of these stocks, we may sound funny, but that's what it is, waiting to short sell once a downtrend begins in them, which can happen anytime.
All right. Also, how about the sugar themes? Do you kind of, are you looking at it? Because those were some of the stocks which were on fire. A couple of initiation report essentially that came in, the whole ethanol blending scheme, and along with that, a few of other triggers which were working well for the overall industry. We've seen significant rally coming in the past for sugar stocks too. But in this year, do you think the momentum is yet to catch up? We've already started the sugar season. Any stocks that one can look at?
Yeah, there is a 10-12% spurt that can happen in stocks like Balrampur Chini and all. Maybe we might even go back and retest the all-time high of 528. So at 444, it's about 15 to 20% spurt up in sugar cannot be ruled out. After consolidation, they've made a breakout. But since we have got very large number of very gorgeous high reward risk patterns of multi-baggers, we are not having the capital to gamble on sugar stocks. We've got multi-baggers in chemicals and other places, so we'll stick to those.
All right, Sushil, last question that we have this morning for you. Pockets to hide, you think, if markets were to correct from this level?
Chemical stocks, oil and gas.
Names, please. Few names that you could suggest offhand.
Almost anything. I told you a few names already. And then we can look at small cap pharmas that have still got a lot of juice. Large cap pharmas are very dangerous. Small cap pharma, entertainment and media stocks like in NDTV, Saregama, they are not liquid. So not truly answering your question of hiding for big pockets, but small pockets can, still there is a lot of underperformance that they are going to catch up on. and chemicals, small pharma, refineries, oil marketing companies, HP, BP, IOC, and entertainment and media stocks. Good enough to create enough hiding space for small investors.
All right, Sushil, we are going to leave it. We're just going to leave it at that. Thank you so much for taking out the time and
Have a good
speaking
day.
to us.
Have a good day, Nickey.
You too. Thank you. All right, let's actually navigate our discussion more towards the fundamental side now, just to understand how is that stacking up with the flows that we're seeing from the foreign institutional investors, and perhaps it being a most eventful week in terms of the central bank action. But to answer this and more, we're being joined by Dipan Mehta of Elixir Equities this morning. Morning there.
Good morning. Thank you for having me on your show.
Pleasure. Pleasure is all mine. I'm going to start off by asking you, what do you make out of the current rally? Of course, a bit of profit booking has crept in. The journey has been rather too exhilarating for the markets. But in terms of perhaps crude now behaving a little more differently, does that evoke some amount of inflation worries? And also, if you look at the FII trend, they've almost the net sellers after 6 months. After being the buyers in Indian equities, are you looking at it any differently?
Well, I think, we're in a classic bull market, and there will be corrections, and there will be always walls of worry, which this bull market will, climb and go higher and higher. What I'm most pleased about is that the underlying corporate earnings remain extremely strong. Domestic liquidity is favoring equities, and they're acting as a very solid counterforce to FII negative flows. And as and when we'll see positive FI flows, we may see the market scale to even higher levels, with the Nifty and Sensex being the major recipients, those indices and their constituents being the major recipients of FI inflows. So I'm not that perturbed about oil prices going up. I think we have seen much higher oil prices, and the economy has sustained and even managed to thrive in those points of time. In any case, I think our forex reserves and our overall economic position is much more stronger to absorb a higher oil price this time than it was in the past. So while there could be concerns here and there about inflation, oil prices, I'm not that concerned. And you could have a short-term correction, no doubt about that. We are also expecting that, and therefore our short-term view is cautious. But medium to long-term, I think we are in a multi-year bull market, and that's just going to grow higher and higher and better and better.
Sure. Speaking about multi-year high levels, let's talk about PSU banks, because that's where we're seeing most amount of action coming in. 13-year high for the PSU banks. Perhaps SBI is one where actually we're seeing some amount of action. But how are you looking at the space? Do you find the valuations to be a little more demanding at this point of time? Or you think they're less about that, they're closer to around that one-time book value, which perhaps makes these stocks still attractive at this level? How are you reading into it? And something like Dhanlakshmi Bank also, the stock is down and out by as much as 4% in today's trade after the independent director quit, citing multiple issues over the operation and other issues within the organization. How are you looking at banks like these?
I see very positive on the banking sector as a whole, and PSU banks are correcting multi-year underperformance with the move they're making in recent times. Valuation-wise, they are still reasonable, I would say attractive compared to the mid-cap and large-cap private sector banks. And the NPA cycle certainly hasn't turned. Fortunately, a lot of these PSU banks are focusing more and more on retail lending, which is perceived to be safer. So I think that PSU banks will remain to be outperformers over the next few quarters or so. But if you want a longer-term picture, like 3 years, 5 years, 10 years, then I would keep our faith in large private sector banks and some emerging private sector banks, like maybe an IDFC First or a Federal Bank or even an IndusInd Bank.
So you completely would like to stay away from the PSU pack?
No, not really. I think, you could paint all the PSU banks with a single color. They're more or less in tandem, the way they kind of, move up, move down, and even in terms of performance, more or less it is pretty much aligned. So you could buy any of the PSU banks, and there's not much of distinction within their operations or their style for that matter.
So within PSU banks also, do you have specific preference that could perhaps, categorize the banks? Because there are a pocket of concerns within the few banks of PSU space too. Would you want to further bifurcate them?
No, not really. As I said, I think whether you buy a Bank of Baroda, Bank of India, Canara Bank or PNB Bank, their returns will be middling around the same level or so. There's not much of distinction in their operation. So you could pick and choose whichever bank you want. But one thing I like to point out over here from what we are seeing from investor portfolios is that gradually we are seeing a lot of weightage being given to banks. And I would urge investors to have a look at the weightage of banks within their portfolio and make sure it doesn't exceed that 25-30% mark. Just from a point of view of risk management and keeping the portfolio well balanced across all sectors or so. So let's not get carried away. Banks have done well in the market last 2-3 years or so. Performance also has been good, but there's only so much in measure that we can buy.
Sure. I actually have one last question for you. We're just going to coin it in two parts. A, your view coming in for the metal space, given the kind of news development that we're reading in from the China stimulus. That's one. Of course, Tata Steel also, we've seen some news report coming in where the financial aid finally from the UK has come through. How are you looking at the metal space? That's one. And the other bit is for the telecom sector, where something like in Vodafone Idea and Bharti have started doing well. Vodafone essentially on back of slew of reports which didn't come in, which suggests of investment potentially coming in for the debt carrier. How are you looking at the two spaces?
I'll go backwards. I think Vodafone, if it is able to survive and even grow its operations and kind of control the kind of attrition which they're having on the customer side, then rather than buying Vodafone, you're better off buying Indus Towers. That's one company which is available at very attractive valuation disclosure. We and our clients are invested. It's available at attractive valuations, decent return ratios, adequate scope to increase tenancies in their existing towers, as well as grow their network. And compared to global peers, it is available at very attractive valuations. So if Vodafone is going to survive, then I'd prefer betting on Indus Towers rather than Vodafone per se. Bharti Airtel, very positive on that company as well. I think it may not be the kind of multi-bagger that it has been in the past, but certainly it can give outperforming returns and one of the top picks within the index stocks per se from our perspective. Will benefit from operating leverages. Capex plans are now well taken care of from cash flows and great value being built in Africa and some of the other ancillary and associated businesses. So positive on Indus Towers and Bharti Airtel from the telecom space. Coming specifically to metals, I think you could see a trading rally in metals at any point of time. There are so many data points which keep on coming up: production, price movements, China, inflation. So from that point of view, you could certainly have a trading rally at any point of time. But from a longer term perspective, when you have 3 years, 5-year type of a view, our preference would be for the commodity consumers. And there is so much happening on the ground in terms of rising consumption spends, and autos are doing well, real estate is doing well. There's the entire capex cycle that one could look at. Banks are doing better, NBFC is also in a sweet spot. So there are just so many sectors doing so well that we'd have to rather focus on those secular growth sectors rather than metals.
All right, Dipan, we're just going to leave it at that. And thank you for taking out the time this morning. All right, we're going to be looking at Jupiter Lifeline Hospital's listing out there. Pre-indicative rates at least suggest a 32% uptick over the issue price for this one. That is the one that you need to keep a close eye out on. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching festivities, greeting for the festivities around the corner. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.